Hi folks, how you doing? This is Iqbal with NVIDIA Analysis and Assessment. NVIDIA made an all-time high last week, as you see in this chart, 183.29, but it could not sustain above 182 level. And my maximum price target, as I showed in my previous videos, was 182, as you see on your screen. You see here, maximum price target before the next earnings. So still, I think above 182 is not a safe level for Nvidia. So now, how Nvidia can perform this week? Let's try to make some assessment using different data points. Starting with the forward PE, Nvidia forward P as of Friday last week was 40.49, slightly higher than 1 week prior, but last 4 weeks, you see the average is about 39.89. And if you go further in the past, sometime in April and May, we see that Nvidia and overall market was under pressure due to the tariff situation. But sometime early Q1 and Q4 last year, Nvidia also maintained the forward P around 40. You see here? But Q3 and early Q4, you see Nvidia was trading around 40 to 45 forward PE. So if the bullish situation continues for Nvidia, then there is some room for Nvidia to go further up. But still, I think around 183 or 184 is a very strong resistance level for Nvidia for this quarter before the next earnings. And the second data point is the cumulative percentage change. For this quarter, you see the maximum point NVIDIA touched was 25.875%. And that happened sometime in 30th July when NVIDIA was making all-time high. And if you take a look previous quarters, for example, Q1 NVIDIA max point NVIDIA touch was 17.3%. Q4 last year 3.20%, and Q3 2024 25.7%, Q2 2024 before the earnings was 36.6%, and Q1 before the earnings was 38.6%. So overall average, if we ignore Q4 2024, was around 30%, the maximum point. So based on the cumulative percentage change, yes, Nvidia has some room to go further up in this quarter before the next earnings. And the third data point is the economic data. As we noted on Friday, we had the employment report published, and we see that unemployment rate went further up compared with the last month. It came in line with the forecast. The forecast was 4.2%, and the actual is also 4.2%. The last month it was 4.1%. Let's take a look overall trend for the unemployment rate. So on your screen, you see the overall trend for the unemployment rate. So in last 5 to 6 months, unemployment rate is moving around 4.1 or 4.2. So basically, it's not coming down. So you can interpret in different ways. For example, if Jay Powell will read this data, he will think that the labor market is still very strong. But other economists would think that labor market is stagnant. Okay, it's not improving any further. Unemployment rate is not going down since last probably 8 or 9 months. So in fact, if you take a look further in the past, for example, Q4 2023 or Q3 2023, unemployment rate started going up after that. You see that sometime in 2023, it used to be around 3.5 or 3.6. And another interesting fact, you can see that sometime in Q3 and Q4 2024, you see that overall unemployment rate was around 4 to 4.1, and the Fed did the interest rate cut in Q4 last year. And after that, labor market did not improve. You see that unemployment rate is still around 4.1 and 4.2. So I do not understand why the Fed is not doing any rate cut at this point. Because the labor market is not improving even if they did the rate cut last year. So this means that few more rate cuts are needed to improve the labor market. And also, we received the inflation data last week that was PC index. And the PC index overall year over year, you see that went up 2.6% versus the forecast 2.5%. And the last month, year over year, it was 2.4%. And the core PC index, you see that it went up 2.8% versus the forecast 2.7%. And also last month was 2.8% year over year. So looking at the inflation data, it looks like that the inflation is started rising again, but is still below 3%. So that gives a mixed signal to the Fed, meaning that the inflation data suggests the inflation is still not going down, right? The employment data is telling that labor market is not improving each month, but inflation data is telling a different story. So that makes Fed job real difficult if they're going to do any interest rate cut now, or should they wait more. Another data we can take a look is the non-farm payrolls. So with the employment data on Friday, we also received the non-farm payrolls data, and it tells that in the month of July, the new jobs got added was 73K versus the forecast of 106K. Before that, last four cycle, you see that it tells that jobs are increasing month over month, but in the month of July, something bad happened. Okay. So this data, 73K versus the forecast 106K, I don't know how to read this data because it doesn't make much sense to me because last 2 or 3 months we see that, you know, more jobs versus the forecast, right? And all of a sudden, in the month of July, something different happened, right? So in the next month, we'll see how it goes, but I'm not going to trust too much on this data. That is 73K. For next week, if you take a look, economic data that's going to be published, I do not see any significant data going to be published this week. Monday, pretty quiet. Tuesday, nothing much regarding inflation or the job data. Wednesday, nothing much, but we had the Fed governor, Lisa Cook, is speaking. Thursday, we have initial jobless claim. That could be important. And Friday, nothing much. So, in terms of the economic data, it's pretty quiet week this week. And another data point that can impact overall market this week is a new tariff. So as you see on your screen, based on the new rate, you see different tariffs for different countries. But the most important tariff, would be US versus China. Okay. And the deadline is on August 12th. So if US and China do not come to an agreement before that, that could negatively impact the overall market. So we should be watchful regarding the tariff sometime mid or late this week. I'm hoping US and China can come up with some kind of agreement before the deadline. And now we can take a look another data point as technical charts. As you see on your screen, 90-day hourly interval chart and also the Fibonacci levels. I selected the lowest point for the Fibonacci is at this point, that is 116.11, and the highest point is the all-time high, that is 185.30. So based on the Fibonacci levels, you see that NVIDIA started coming down from the all-time high, and the next support level, that is 23% retracement of the Fibonacci levels, and that translates to 168.97, and that makes a very strong support level. In my opinion, any buy around 168 would be a good buy. And also, I do not think Nvidia will be able to break 168 level in the first attempt. But for some reason, if Nvidia is able to break 168 level, then the next level of support is 158. And after that is 150.7. And if you take a look at the MACD chart, the second chart at the bottom, you see that we had a very strong momentum early last week, but after that, you see that similar correction happened. So, anytime in the past, whenever you see the sharp increase, it followed by some correction. So, you see here, sharp increase, and then you see some correction. And here also, sharp increase on MACD, and then you saw some correction. Similarly, here, and also here. But at this level, you see MACD is way below zero level, and that tells NVIDIA should recover from here early this week. And regarding the different news about NVIDIA and overall market, so nothing has changed for NVIDIA, meaning that all fundamentals at this point for NVIDIA remains the same. But you should be careful regarding the US and the China tariff deal. So sometime by the end of this week, NVIDIA might start showing some more volatility if there is no deal between China and the US. So that's all about my analysis and assessment for Nvidia. At this point, I put my limit buy position for Nvidia at 172. But let's see if I can be able to get that buy position for Nvidia at 172 on Monday. I hope you like the video. Thank you so much for watching. Talk to you more in the next video. Take care.